Hey everyone, happy midweek. We've made it. That big, large event that happened last night is over. The Earth still moves and turns. We're all awake and moving forward. And you know what? We've been talking about this one for a while, the M&A one, and it's not just going to be boring, just all M&A, and whatnot. We wanted to find someone that we could talk about some of the bigger deals out there, but also who's gone through the process, because M&A is usually a good indicator of the market in general, how things look. And we were lucky to jump in front of Morgan here in Toronto. And he put together in a very short period of time, quite a deal, a consolidation. And I won't ruin the whole story. I won't give it all away, but pretty hard to do, pretty impressive. And I want to kind of do that under the backdrop of that's going to be an interesting story. So we want to know how that came about, how you put it together, what it took. To get people a sense of putting a deal together here in Canada in the mining sector, what that's like, and what that bodes, for markets moving forward here, because we're into, I think, what a lot of people think is a mining sector boom that's about to happen, and we can do this under the framework of all this work you've put into with NexGold as the president of NexGold, and certainly that is under the umbrella of precious metals and how well they're doing as well. So Morgan, it was great to see you there in Toronto. Great to have you on. How's it going?
Oh, thanks. Yeah, no, it's going really well. How are you doing?
Good. So it has been a whirlwind for you. Maybe because I don't want to take away anyone's thunder, but you had you've put a lot of work into the sector, and you've hustled your way and impressed some people, and then give the long and short of it, and impress them by also like making things happen. And I think that's what's such a great story in this, and I'll let you tell the whole thing, is that if sometimes people say, if I could just get in front of someone, my life could change. It's like, well, if you're not ready and you're not prepared and you can't pull things together, you could get in front of someone and blow it. So this is a story of having the right time, the right hustle, the right ambition, the right ability to put things together, and it has. So under that big mystery, you can unfold the story from there.
Oh, let me start the theater up here for a second. I just also want to preface with that's not my background. It's
beautiful. I was gonna say you must be great at the piano. Let's maybe start with that.
Yeah. Very. These hands aren't exactly pianist hands, one would say. Like any good deal starts with two things. It starts with vision, and it starts with a path. If you don't have a path forward and you don't have the ability to execute, you can have all the visions in the world and all the goals in the world. And I know it's the most cliche saying you'll ever hear, because you see it all over the internet and Instagram, is like, have vision, have goals, but execute.
Yeah.
And this market is in such a unique position right now that there are amazing projects like Goliath in NexGold, amazing projects like Signal's Goldboro project, that the equities have just beat up. On their own, they're like, okay, well, maybe they'll make it into a mid-tier, or maybe they'll, in a few years, they'll turn into something. But when you put things like this together, you put a vision of what I've always said to the market once we really formed NexGold was, we want to get to minimum of 200,000 plus ounces per year. We want a path to that, and we want sub 400 million capex projects. And most people ask me, hey, like, what's your goal to get that together? It's about 2 years. More, from launching NexGold in July, I think we can do it within 2 years. It happens we did it within 3 months, but that's a different story. I'm going to tell you, out of going through this process now multiple times in the last year and a half, it doesn't just happen in 3 months. This took a year to build. From when we started with Treasury Metals and the Black Wolf days, and then into NexGold, and then into Signal, those iterative conversations start months and months and months before you even get to a point where you're like, so is this a handshake? Are we gonna be friends? Are we gonna be frenemies? What are we gonna be?
Yes.
And it really comes down to, I think, having an absolutely amazing backer. Frank Juster is just an incredible human, amazing backer. But what I love about how he backs people is he backs a vision and a plan. He goes, here's your vision, here's your plan. If it changes, tell me.
Yeah.
Right? Like, you communicate. But if he likes the vision and plan, he's willing to get behind it. And this is a kind of one of those situations where we had a vision, we had a plan, and we're like, which assets can we integrate? And it just so happened the teams between NexGold and Signal got along really well. They complemented each other. There's now progression strategies there, and there's ways to integrate what they've done and ways to integrate what we've done. So it's all complementive. Now, you asked about putting it together. There is a whole plethora of steps to that, but I really think it starts with an open and honest conversation. It's less so about, everyone says it's always about game theory. In mining, it's about how do we come together to create something better for our shareholders. Less so about how do we dupe the market into, believing we're going to have the greatest AI tech in the world and, oh my God, it doesn't exist.
Yes.
So.
Well, this is a unique industry too, because even when I first started, I thought, well, how, like, people get excited, like, oh, we managed to get this project away from XYZ. And in my brain at first, coming from, from Merrill Lynch and whatnot, was, well, why do I want something if someone else couldn't make it work? Because I just didn't know the space. You don't realize that a lot of these, like our R&D ventures, someone picks up a property, it could be great. They fund it, it falls apart, they don't hit the right hole, but it doesn't necessarily mean that that property isn't good. There's a million factors that can come about where someone has a property. I mean, take Great Bear, has it for a while. It's not until Chris Taylor comes along, reimagines and re-envisions something, and boom, things take off. That can happen in the sector, not as much in others, but I had to get that in my head at the beginning, which was the first step. Yep. So right now, it's a unique time, I would argue as well, that there are assets and there's lots of bidding going on. We see on the huge end, Cuero with Silvercrest, yep. Philo, with BHP. There's lots of deals, Rio and Arcadium, but there's a lot of property out there. There's a lot of, what do you call it? Pathways with projects that are being held that may not be being developed. So how did you, like, before we take the major leap forward, how did you even identify some of these ones where it's like, okay, I think this project and this team might get along? Like that is a lot of workload right there just to begin with.
Yeah, I mean, look, the back end due diligence that, like, we have a powerful entity behind us, which is the Fiore Group, right? We have an engineering firm called Fuse Advisors, started by a guy named Ryan Waymark, who used to be a VP for NextGen. And Ryan and his brother and their friend Davis started this firm, and they've grown it to 30 consulting engineers. And so you have that embedded in here. They're independent, obviously, but we are able to work very closely with them. So you have not only the ability to look at projects, but to be nimble and quick. I don't need to go to the big firms and say, hey, can you look at this and give me a due diligence report in 21 weeks or 8 weeks or 3 weeks or whatever. It's like 4 days. Okay, here's the highlights. Here you go. So there's a machine behind that we look at. We are able to look at all these different projects. How this came around was truly a relationship game. I had a relationship with the debt holder at Nabari, and we'd spoken about a couple different avenues and different projects. And he said to me, hey, like, have you looked at Signal? Like, it's similar size to you guys, an asset base. Like, I'm like, yeah, I've heard of it. I've looked at it. I said, but I didn't really cue in that you were the debt holder. And he's like, yeah. And I'm like, oh, okay, that's interesting. So that conversation evolved, and then it evolved into Kevin and I sitting down a whole bunch of times. And then, our people have been doing due diligence in the background. So there's a lot of avenues and relationships that you need to have to get these, but it really comes down to trust. Do you trust that the other side is going to do well for your shareholders together? And in this case, having a backer like Frank, Sprott, Extract, like having the share structure we do, having the capital we have. I mean, should be closing our financing here shortly, and that'll be a nice thing to the market. Those types of avenues are what can build companies in what I consider as a depressed equity market in a flying gold market. Yeah,
that disconnect, let alone, I mean, that's maybe let's explore that first, because I'm going to jump back and forth a lot, because I definitely want to hone in on that, the nuance of what you're saying, like have a plan and can you put it together and execute. That is a saying out there. It's kind of the same as if I look at, like, say, nutrition, like eat clean and expend more calories. Like, it's obvious, people know, but at the same time, it's something that's obvious but not easy to do. And I think with this as well is that this is a very much a relationship game. People need to feel like you said, comfortable, and also, yeah, you might have the biggest dream in the world, but are you the person? And that trying to figure out, like even from a Frank Juicer point of view, for him to go, are you the guy? Like, you're telling me that you can put this together, but are you the guy? Like, so.
Man.
And I don't want to put you on the spot or anything like that, but
no, I'm happy to answer that one.
Yeah. So those are things where people go, well, how did that? Okay. So you get the debt holder. How does this even come about? Because like, it is a lot of work to get into the circles where they go, this guy's speaking our language. He gets it. I think he can do some stuff. That's a long period of time. But then, like, okay, let's see, can you actually do this? It's challenging. Yeah. It's not, I mean, and once again, it's like, I know it isn't that you did this in 3 months, because it is a lot of buildup. You've just managed to execute very quickly, which was very impressive.
Thanks. I give a lot of credit to the team, right? Like, I was spearheading a lot of it and like pulling it together and kind of doing all the initial conversations. But I'm telling you right now, without an amazing group in the NexGold side, in the treasury side, in the signal side, in the Fuse advisory side, our boards, like, there's a lot of moving pieces and intricacies to these, plus all of your investors, your big investors that you have to bring over and like say, hey, here's what we're doing. What do you think? Because you don't want them pulling out. You want their money to come in, right? You need their checks. So it's a humbling process for sure, because you get beat down a lot during it. You just kind of have to keep going, but it's a trust building exercise. And it's Kevin and I had to build trust with each other, and that can take sometimes a short time and sometimes a very long time. But the trust that we're doing this for the better. So, you asked about the big guys look at you and go, okay, you're the guy that's going to do this for me, right? And when I first met Frank, like, I was obviously in awe, because I'm like, oh my God, this is Frank Justra. Like, yeah, right. Like, got to remember, I started building mines when I was like 22, in the trenches overseas, working for companies like Freeport, hearing of these guys, right? Like, these are the guys that built the mining space. Yes. These are like the legends of people that you're like, and once you meet him, you're like, wow, he's like nothing that I thought. He's like humble. He's nice. He's hyper smart. When you're talking, you see things clicking. He's like, ideas are just, he's 25 steps ahead of you, kind of thing.
Yeah.
And it truly was one of those, like, I'd say hi to him. We would have brief text conversations, sometimes some phone conversations. And it was until I put a vision up there that I'm like, here's what I want to do. And he goes, it's pretty bold. I'm like, wow. No one else is doing this right now. So, like, why can't we? We're the Fury Group. You're Frank Justra. Like, we should be able to do this. And he's like, okay, go do it. And after we got the first one together with Jeremy Wyeth and the team at Treasury and Black Wolf, and integrated there really well, and some super strong, tight relationships, Frank was kind of like, yeah. He said he was going to do something, and he did it. That's a strange thing. And then we did the Signal asset, and he's like, okay. So we've developed a very good, strong working relationship, and you develop personal relationships through that. And it's very, I don't know how to say it. It's again, it's a very humbling experience to have someone with that much background in this space you can phone for advice, and isn't like, that's dumb, what are you doing? It's like, hey, how about we rethink about it this way? Or, hey, how about we shift it a bit? I did that 15 or 20 years ago that way, and like, here's where it got caught. And it's something that people right now are missing, so let's look at it this way. And that type of idea pattern, that comes from experience. And there's not many people that have that level of experience that Frank and the Friedlands and the Sprotts and the Beatties and the rest all have, the Clive Johnsons of the world. I mean, built B2, like, Jesus, that's a monster company. And I'm sure there were some real hard bumps you learn doing those kinds of things. I'd rather learn those through someone else telling me about them than trying to learn them the real hard way. I grew up in a farming community in northern British Columbia, and I'm telling you right now, I learned enough hard bumps and I have enough scars on my hands to prove it.
Yes. And the thing is, it's good to know that it's a tough sector. They're probably going to happen anyway in some different form. It's just better whenever you have someone who's willing to, I don't want to say mentor, but I mean, like, help you along the way. And this is what's so important, a message I want to get out to people, especially anyone young and looking to get into a sector. This sector is severely underrepresented. There's a lot of opportunity. And I mean, this is a good example of that, is that, yes, you need to be smart, but you need to have a whole bunch of other skills. If people are wondering, what should I develop in order to get into here? It's, like if you come from the geology point of view, or a mining engineer, you can come from the analyst or financial markets, which is I've come from. But there's an opportunity where, once again, there's, I guess, a trifecta of things that occurred that Frank may have not come back into the markets. Like, he doesn't need to. He just kind of did the last couple of years or so. And that's like, wow, that's a big thing because he sees something. So he obviously sees something at a bigger macro mining scale that it's like, I don't want to miss this one, because, hey, like, no one wants to miss out if there's going to be a hot market. Doesn't matter how much money you have. It's not about the money. It's about being part of a big thing. And then there's obvious deficit of, especially a lot of young, energetic blood that's smart, bright, and like, let's just go do stuff. So if you've got someone who goes, I'm your guy, you do, like, those opportunities exist. Whereas, like, if I go run to Google, there's a lot of bright minds going, I think I could do this. There's like thousands of them. Like, there's not, it's saturated.
Yeah. I agree. It's saturated in the sense of everyone has an idea.
Yeah.
Anyone you talk to. I mean, that's the fundamentals of our economy, is have an idea and actually discuss it and debate it intellectually, not in a very polarizing manner. And we won't go there right now. Yeah. But when you talk about, like, how you enter the space and how you get a mentor, like, my background in this space is, I'd say, arguably different than most. I didn't come in through the financial means. I didn't come in through the analyst and the working for a big engineering firm or a big firm. I literally did not chase money at all. I know everyone's going to say, well, that's crazy. You should have chased money your whole life. And I probably would have been a whole heck of a lot richer if I didn't get a divorce too. But, it's all different. That's a joke. That's a joke.
Yeah.
I came at it from, I really want to get to point C. I want to get to C-suite. I want to run a company.
Yes.
And I was young, I said, I think I can do this different, but I don't have the skills to understand what I call is the BS factor. Can I call BS on something? And if you don't have those skills, eventually you'll get run over. Yes. You either gain those skills or you hire those skills.
Yeah.
Right? But if you don't, then you get run over. And so I started mine building in the trenches. Like, my background's electrical and automation, and they would send me in, and there's days I was partially running a project, and there's days they're like, hey, that piece of equipment broke down, go fix it.
Nice.
And I'm like, okay, cool. And you just kind of build trust, you build connections. And then by the time I was 24, I was working for Freeport in Indonesia, and then Mongolia, and then Togo. And then, you start to get a bit of a reputation of, like, hey, that's the guy we kind of bring in to fix things like projects. And
yes.
And then eventually it comes to me, like, when it came to me, I was like, man, I really, really, really am too comfortable. I need to like completely lobotomize myself and join the capital markets.
Yes.
let's just take a huge pay cut. Let's just go right into it. Why not?
Yes. Yeah, because that's a big, bold move. But once again, it's you're able to put another piece of the puzzle together. And this, once again, for anyone who's even thinking of going kind of the route of where you're at, is that you have to have a skill base in one of those things. So coming, I would argue, from the mining engineer is so impressive because you have a specialty skill, which is not a lot of people have. And you have had market experience now for years now. So can you learn that? Yeah, you can learn how the markets work. That's not a big deal. But you also can go, I can find the people, these big name people who understand them very well and who are very well backed and have lots of money. And I can have that conversation with them. I don't need to be the expert. I need to be able to have the dialogue. But I have this over here. Having that is, I think, key. You have to be able to put on different hats to have those conversations, and not everyone has that skill. Can you talk to a retail investor who's got $100,000 into our 50 grand or 10 grand? Yes. But the institutional conversation's a lot different. Can you talk to a Frank Giustra? Can you talk to the board? Those, with having a mining engineer background or something, that's a lot of a lot of skills that a lot of people don't have. But when they do come around and the ability, and someone puts their hand up and says, I can do it. Like I said, and not to blow too much smoke up your butt, but that it's impressive to say, hey, I'm the guy. It's like, hey, coach, put me in. But then you got to be Michael Jordan. Like, you have to hit it. You have to do it. Otherwise, if you put a spotlight on yourself and say, hey, look at me. But yeah, you've done it. You've put the deal together. Now, I mean, there's lots of factors. There's markets. There's everything else. But to be able to put it together in a short period of time, and to have someone look and go, oh, wow, all right. That's a big deal. It is a big deal. It needs to be celebrated. And I think those wins on this level need to be celebrated in this market, because it shows that someone like a Frank Giustra had saw something in you. I'm sure he sees lots of things in people, but once again, there's potential in lots of things. It's like, okay, you've got potential, but there you go.
Well, I'm sure when Frank first met me, he was like,
he's got no
another
potential.
guy. Just another guy. This guy has got no potential. Like, my goodness.
Jesus.
No. Look, I think a big part of, putting these deals together is having enough ego to do it, but knowing when to shut the ego off.
Interesting.
And a good example of that is in what we're doing with NexGold. And, from originating the entire deal, putting it all together, working with our team, working really close with Oren Baranowski, who is our CFO, Jeremy Wyeth, all these people, like, we work really closely together on this, our board, but, really leading, all putting together. I found that, when I looked at what Signal had and their team, and Kevin, who is, on the board of B2, who's built mines all over the world, was one of the guys that helped start Kirkland Lake up back in the day. Like, he was one of the original guys that helped found it. Like, you go, okay, am I 20 years experience doing this, where you have someone with 35, and then you complement him with someone like Jeremy Wyeth, who's 35 years of pure building experience. You're like, okay, I'm going to take my ego hat off. I'm going to give you guys all the tools that I humanly can that are within my tool chest. And I said, look, I think this is, it's arguably in really, really, not arguably, it's actually really in really strong hands now, because you have people that understand capital markets, mine building. I understand a lot of the mine building and the capital markets, but again, you go back to, if you take your ego out of it and do what's best for the shareholders and company, it wasn't best for the company to have 3 high-paid executives. It was good for them to great for the company to have a leader that has capital markets experience and mine building experience, and a COO that has amazing building experience and was, one of the better builders in the industry, if not, the best, just like Jim Gowans. Jim's was amazing at mine building, sat in all different roles all the way through Barrick and De Beers, and is on the board of Tech now. Like, so I think having that ability, and don't get me wrong, I've learned that ability by getting humbled and beat down more and more and more and more. I also have a 6-year-old, so you just kind of learn that too.
Helps too, yeah.
Yeah. No, but it was really an experience of, you pull back and you go, what is best for the company here, and what is best for shareholders? And if you can't turn that egoic personality off when you need to, you'll fail. Yeah. You'll fail, because you'll hurt the shareholders, or you'll hurt, yourself in doing this, your reputation, that kind of stuff. So I was honored to be a huge part of this. I'm honored to work with Frank and the network that I have now, because I'm a huge believer in doing what you say you're going to do. And sometimes it doesn't work. Like, yeah, sometimes you're like, I said I was going to do this and I did it, and that was a dumb idea. Like, sorry.
Yes.
But own it, remove the ego when you need to, and don't stop. Like, just, oh, well, I screwed up there. Yeah, dude, I've screwed up more in my life than I can count. Trust me. I'm sure we know people that I know I screwed up. You know what I mean? Like, it's the world of this. If you don't mess up, you're not going to learn. I think
Yes.
the biggest thing to me is with this is the two things, you know, have the ego to put it together, which is the drive, the knowledge, the ability to steer things, but have enough self preservation, but also enough self confidence to know when you need to put that ego away and say there's someone else better to do this.
Yes, it is a very challenging, especially the M&A side, because you are dealing with high-level successful CEOs that have done lots of interesting deals, especially if you're getting, you know, quality projects. They've done some big things. They've rightfully earned, you know, a lot of respect. And finding the team, like that synergy, people want to say, oh, there needs to be synergy, and they kind of blow it off as being, oh, of course there has to be synergy. That's not easy. It's like the C-suites have to get along, and sometimes have to be told and painted the story in a certain way. And that is hard for someone who is an A-level type person that has like that, you know, that is driven. A lot of my friends were at Goldman Sachs or Solomon Brothers in M&A. These are definitely A-type people. They're very driven. They're very smart, but they have that skill. They can go speak to a CEO and they can massage it to make it work and to paint the picture to say, this is where we're stronger together, this whole group together. This is where we have our pluses. This is where our minuses. And that is a skill all on its own that I think is really interesting in M&A itself. And I think if you looked at, like, say, if we looked at, like, say, Coeur and Silvercrest, and that's a big $1.7 billion deal. I mean, these deals don't come overnight. They take a long time. But, you know, there's so many factors that they would have to look at while growing their business that's kind of where I want to paint this picture of it's the same amount of work that you had to do to put together a deal as it is for BHP and Philo or, you know, Rio and Arcadium. It takes the same level of work. It's just, you know, it's a different conversation.
Yeah, it is. And it's a differential in capital too. You know, like when you're a BHP or a Rio or those groups, your capital pool is, you're not going to banks and
No.
raising equity. You're just looking in your multi-billion-dollar pocket going, yeah, that makes sense. Let's just do that. But you're not wrong. I think the market right now really does need wrap up. I mean, Rick Rule talks about this all the time. There's 3,000 junior mining companies out there, and there should be 300.
Yes.
And I don't necessarily disagree with that, because we're all vying for the same pool of capital. It's a shell game. You're just moving capital around.
Yeah.
And, you know, this is the new shiny object. That's a new shiny object. And that's inherent because the equity markets in the junior and mid-tier space haven't really caught up yet.
Yeah.
And that means that the generalist investor hasn't piled back in, which therein is the opportunity. Therein is undervalued assets that and aren't going to get sold to majors, so people don't love them. Doesn't mean they can't cash flow. It doesn't mean they can't have a reserve replacement model that is strong. It just means that they don't fit the current investing thesis. But again, to be a contrarian, as like Rick or even Frank would, you look at the model and go, but it's going to change. And when it does, I want to be, and you see that with the big investors in the gold space right now starting to pile in. The Sprots, the Justras, the Rules, all of them, they're all starting to pick horses, you know?
And this is where you guys kind of step in, because I mean, and I don't want to put words in your mouth, but did I hear like you want to run like a mid-tier gold? I mean, that's what you want to do. That's your dream. Like so how many, there's not a lot. I mean, I'm being rhetorical. There's not, how many mid-tier gold producers are there, and how many of them are formulating now to create something new? I'll let you answer. I mean, there's not many.
I mean, arguably in Canada, there's, since Calibre bought Marathon and IAMGOLD Côté, New Gold's a $3 billion company. I think you're leaving the mid-tier space. I really don't think there is any developer mid-tiers that will go after the projects like what we do at NexGold. Like, we're looking at 100,000 ounce per year producers or potential production. And, you know, when you put that on its own, everyone's like, okay, it's great. I mean, Orla Mining does it at 120. They're a $1.7 billion company. If you put that kind of company on the Australian exchange, you're a multi-billion dollar company, 1.5 to 2 billion all day long.
Yeah.
It's crazy. But over here, this is why we formed NexGold the way we did. The path to 200 to 400,000 ounces per year. You know, each project can actually sustain a certain amount of that. I mean, Goldboro in itself can. If you look at the underground and developing that at a different time frame. So having the team, so now when you look at something like NexGold, you're not just an aggregator. You're a builder team. You're a capital markets team. You have
Yes.
the assets that can be built that are near-term permanent. I mean, I would say outside of a Cisco, we're the two most near-term permitted assets in Canada. When we'll get our permits in 2025 for both of them. And then we'll decide which one we build first. So like two twin brothers looking at each other, beating up each other, trying to figure out who's stronger. It's kind of a fun exercise to have, because you have 6 million ounces of gold and 4.7 in M&I and expansion potential on both. So I like the position it's in.
That's a good story.
It's a really good position. And when we close the deal, just to finish that thought, when we close the deal, we should have $25 million in the treasury ish, and a super strong management team plus great assets.
So are you going to keep punching some holes out there? Like with that 25 million, what's the plan? You kind of step out, succeed. Are you looking at new, I guess, you're getting a lot of data from both companies to then kind of look, and tell me if I'm wrong. Is it going to be kind of, like you said, like brothers, like, is it going to be kind of like an internal competition, sort of like team A, team B? It's like, hey, we want you both to win, but
yeah, I think there's a couple things. I think you're going to have time to relative IRR and MPV. You're going to have which permit gets in first, and honestly, like, which debt holder wants it built first. They're going to say this one has a higher debt capacity, or this one has a higher debt capacity, but we like this project right now, we want this one built first. So you're actually in a really good position versus debt holders being able to come and say, okay, well, you got one project, we're going to put the screws to you on this. You're like, okay, well, we got two, and we have multiple different debt holders we can go to, and we have multiple different avenues of financing this. So yeah, we're actually deleveraged from that cycle a little bit. What's happening? Yeah, we're going to drill them. We're going to drill both of them. We have enough to do that. We have enough to get into the end of feasibility on both of them. We have enough to get into construction decisions, and maybe even get into a little more of it. Like it really depends on how we spend and where we spend. But
yes,
you're going to have two bankable feasibility level projects with permits. That's a pretty darn good position to be in, obviously, and good First Nations relations. Like, we work very closely with our First Nations on both projects.
And that's a huge factor to consider. And did I see somewhere as well on a $2,200 gold that the IRR was like 41% on one of them?
I would say, and if you were to extrapolate,
yes. Like
I will preface this with a forward-looking statement.
Forward-looking statement, back of the envelope. This is Andrew saying these are the numbers I've thrown out. I'm not saying that they're coming from you.
Yeah, those make sense. At 2150 gold, it could, if you were saying that it's 41.5% IRR, that would
somewhere in that ballpark. Yeah, and anyway,
I would say if you sensitivity tested this and you could extrapolate your own calculations, the two projects are well north of $1 billion together. Probably 1.5 to 2. Nice. But that's an extrapolation, and do your own math and do your own due diligence. But it's a good position to be in.
It's a great, and that's kind of want to get people a sense. Like, once again, we're not holding you to those numbers; these are just back of the envelope. We're spitballing, just so people get a sense of what are we talking about here when we're saying what are you guys looking to do, and that is a very different story than either like a full out big mass producer, like a huge producer, where they've been getting lots of funds lately because gold's doing well. And we had Kobe Kushner on yesterday. We talked about all of them, Newmont, Barrick, Agnico, and those get a lot of attention. But what does, or it's the exploration stories, and those are like a different animal altogether. But it's finding, well, who's really near term, and that's, I think, the next kind of step. This is why, like talking about the M&A and all that, is there's going to be a lot of attention as to, well, who can actually start producing sooner than later out there. And especially rolling into PDAC, and you tell me what your thoughts are. I think that's going to be a lot of attention. Anyone who's knowledgeable in the space, they're going to be looking. They're going to be asking, who's there? Who can I look at? Who can put in the work and deploy the dollars and maybe build it up to a decent production number.
Well, and you got to think about too, a lot of these companies that have been operating for some time are needing to replace their reserves. They are getting to a point, you get down to the last 7 years, it gets scary in the public side. Like you want to be reserve replacing, new NexGold has 6 million ounces, and I think we have as much reserve or as much in the resource category as like a New Gold.
Yeah.
I mean, they're just producing, right? So, or a Caliber's got more now, but none of them are building projects right now. So they either have one of two things to do. They either buy something that's ready to be built, or they buy something in operation. And tell you, there's, the big M&A on the billion level, those fleet quick. There's not many of them.
No. Yeah.
But there's also, not a good number of projects that are near-term permitted. They're a couple of years away, or they're 3 years or 4 years away. So when you say, hey, I've got something that's that's almost done permitting and is buildable and, they go, well, the risk of building a 250,000 ounce per year mine that I have to wait 5 to 7 years to finish permitting, or I build a 100,000 ounce per year mine that cash flows 100 to 200 million a year of free cash, seems like a good idea.
It is. It's interesting. And okay, this is interesting too, because we just had Kobe on, and Kobe actually worked at the Detour mine. He worked at the Madsen mine as well. And nice. Madsen West Red Lake gold. That's also Frank Justra. So he's also involved in that one. And it comes back to this, and we've, like, you hear everyone say it. Rick will say it. I've said, like, everyone says it. It's the people, the projects, and the money. And that matters. It definitely matters. You have to have all three of those if you're going to have any chance of success. And when you're saying, like, there's 3,000 companies out there, obviously 3,000 companies don't have all of that. The cream rises to the top pretty quick. And when people are deploying money and they're looking past, hey, listen, Agnico did 86% last year. Where should I be looking if I want some, leverage or asymmetric gains? Where should I be looking? They should be following, well, okay, who's deploying capital, who's got the team, who's put something together. And there are a few ones, if you're looking for near-term production, that pop up pretty quick.
Well, I like that you brought that up. So this is a triangle, right? You use them in risk analysis, use them in a bunch of different things. People, project, process, in the middle, money. People and projects, if they don't have a process, as in a building process, a fundraising process, an internal M&A process, growth process, the project and the people arguably can fall apart. I'd actually take people over project all day. And I take people over project because I've seen great projects get destroyed by horrible teams. And arguably tier 3 projects become tier 2 projects or tier 1 projects because they got a good team in there. So that's extraction of value. But the money component in the middle is the thing that unifies it all. People, project, process, money in the middle pulls it all together. And that money is your capital markets. That is your big backer. That's your shareholders. That's the the institutions and the banks and all the rest. But yeah, I like the trifecta and the triangle with the money in the middle.
It's so weird too to have learned, in my case, over the last years, is that you'd normally assume, oh no, best project will win every time. You just go for the best project. It's kind of like, there's the data. I always go with the best data. And even early, when someone would say to me, no, the people can't screw it up. Like, you could be handed the best thing in the world and it can fall apart very quickly. And to me, that sounded ridiculous. Like, no, if someone gives me a home run, I'm going to hit a home run. Like, I'm going to do it. But I've seen it myself. I've seen it in other places where you're like, what is happening? What are the decisions? What are the motives? I don't know what the motives of some people are. So it is crucial. And then it also, to some degree, not to foretell the future, it does seem to make sense then why it seems that certain groups, certain capital groups and money groups and people, the Justras, the big names, why they seem to do better than others. It's because they know this lesson. They've learned it for over decades of time and time again, is that, listen, if we have the right people and it's something that is economic, we can make it we can make it work. If we hand something over that's amazing and maybe it's in a risky jurisdiction and the teams, it can also just go south very rapidly.
Yeah, and you're not wrong. I actually think one of the biggest misses in our industry is the human capital component. Look, like you hit on that before. Like, I'm 39 and I always get called the young pup, which is kind of entertaining.
Like, you'll love it in 10 more years.
40. Like, I'm almost 40. Like I'm like been doing this almost 20 years.
Yeah.
I don't know if that's young anymore, but my body sure doesn't, tell me I'm young anymore when I try to go play basketball and I go, ow, oh God.
Tell me about it.
but there's also a lack of people going into geology, into mining engineering that are interested in doing the hard miles. Money is too easy to make now in tech and crypto and other jurisdictions. So in other areas, so when you actually put in the lack of reserves being replaced, and then you compound that with the lack of talent coming in. Now, I would argue all day that there's reserves out there, but if you don't have the talent and the people coming in, that's when prices are going to get knocked up way higher, because you don't have companies being built, like real true blue mining companies. Exploration is one thing, but developing it and building an asset, that's there's not many teams that can do that. B2 is exceptionally good at it. Caliber is exceptionally good at it. New Gold hasn't built in a while, but they had a pretty good builder team. Obviously Rio Tinto, BHP, and all them, they have their own networks.
Yeah.
But on the mid-tier class, I'd say the best builders out there, other than the ones I've listed, are some of the Australians.
Yeah.
The Aussies in general are just a get it done attitude, and they have in-depth knowledge. It goes back to the type, and again, the M in the middle, the money. The money in Australia is very different to the money in Canada, as in pension plans or superannuation plan heavily invests in their resource sector. We don't.
No, this is where I find it interesting, is that the Australian market, we're like culturally, societally, like as a population, very similar to Australia. And at one point we did get it. We knew we were a natural resource country. We funded it well. We knew what we were doing with R&D. We accepted that, there's risk and whatnot. And this ties into it being an opportunity as well. As it hasn't been that for quite some time. The market, or the retail market, has dried down a bit in Canada. And I would argue that's what makes it so exciting now, is that they're going to come together. They're going to clue it up. And they are. Like you can see in Quebec and Ontario, there's critical metal strategies moving forward. The message is getting out, and more as the government spends a little bit of effort to say, hey, we've kind of been bad the last decade, being demoralizing about mining and it's destroying the earth, but every solution that we want actually comes from it. So we have to really revamp our messaging. And if we have that, and they say, listen, instead of it just being a carbon tax where we're going to tax you and we'll take the money and we'll deploy it for you, but say, we want to encourage people to throw a little bit of money into this sector, because you could take a part of putting your own funds into creating all these solutions for an electric future, for AI energy, but for whatever it is that you like. That means mining, but we want you to be excited about it as a population. That could change this market overnight, very quickly.
Yeah, Frank talks about this all the time. When it happens quick. This market, when people queue into gold being where it is, and what that means, it happens quick. When critical metals are being manufactured or being mined and put together in other countries and shipped everywhere else but North America, everywhere else but your home country, like I don't know how it makes other people feel, but like when I look at a net import export ratios of things like copper and critical metals, I'm sitting there, and nickel, and I'm going, what? Hold on, we don't even like, we just export what. We export raw material to be like, those are jobs that we could have in Canada. Those are jobs that we could have in the US. These are like, okay, but we have that mentality of, well, man, the smelter's bad.
Yeah, we shouldn't have that here.
Well, hold on. So if we don't have it here, it's going to be in China, or it's going to be in India. And we're going to just let them do it, but then we're going to buy it back at a premium. And those jobs can get shipped over there. So our reliance on the critical portion of the supply chain has been completely subbed out. So now we're sitting here going, well, we're relying on other people for our, we can mine it. We own it. We're one of the most mineral rich endowed countries on the planet, but we just like to ship it everywhere else. And we're like, ooh, yeah.
Well,
we wouldn't upset the we wouldn't upset the NIMBY side. That would be bad.
Exactly. It's like that's what's so appalling about it is that, okay, we don't want to make any money on this process or provide jobs for Canadians because we want to create the illusion that we're not taking part in that. Whenever everybody knows we're all integrated together on this planet. If someone in India is emitting CO2, it affects us here. So whether we do it in our backyard here or it's done in China or if it's done in India, it's still affecting the atmosphere. I mean, people have to eventually clue into that. And my argument is, well, you should probably want it here because we have pretty strict regulations and we're going to have very strong oversight. So I would prefer if we had it here, not only for the economics and the jobs and creating our own supply chain and logistics platform to directly to batteries, directly for silver and solar panels, whatever, is that we are then actually being logical instead of it just being, this, hey, I don't see it, so we're good. And let's just focus on not using plastic straws. I'm not going to get in trouble. But,
no, like, don't say that.
I know. But I mean, because, and I'll get back to this. Speaking to so many CEOs all the time, and people think, oh, mine CEOs don't care about the environment. I'm like, they all love it. Most of them hike. A lot of them live here in Vancouver. They love it. Yeah. They're not just saying this out of nowhere. They're very cognizant of it. They want to do things properly and well, and they will. And once again, that message, except for myself and other people in the space, isn't getting across enough. And it's going to take a big brush to repaint that story for people. But that's part of why we wanted you on so that people could see what's the pathway for someone young to get excited about this and say, okay, wait, this is interesting. I want to be involved in something instead of it just being an app or this or that or whatever. I want to build something tangible that is actually the materials and the stuff that goes into all the stuff that I want.
Yeah. I mean, I think there's a lot of issues that are systemic to virtue signaling that we love to do in this country. A lot around the mineral resource sector saying, oh, well, we really got to be strict on the regulations. Like, we are strict on the regulations. We have some of the strictest regulations in the world around commodities projects, yet it takes us 8 to 10 years to permit one. Why? Well, okay, we did all the baseline work and now they go through these intense review process at the government level, and they're generally, unfortunately, people that aren't generally from industry, that are PhDs and masters, but they haven't spent time in the actual industry understanding how it works and how actual mine works and getting to know the people. We throw people in there, and it's not a fault of the people. It's a fault of you can't pay the right people the right amount of money because they're capped by government salary. That's a whole nother discussion, but not being able to effectively move projects efficiently forward and effectively, it hampers us as a country. We're kind of more of a farming and lifestyle country now. We have some mines. We're a mining country. I mean, we're founded on farming and mining. People tend to forget that. And gold and copper, and I mean, potash is a huge part of our society. I mean, you ask people nowadays, in a city, well, where do things come from? Well, I buy my food at the grocery store.
Yeah.
So, okay. Do you know that Canada is a huge net exporter of potash? What's potash?
Yeah.
Fertilizer.
Yeah.
Oh, where do we get that? Saskatchewan. Well, I thought we only farmed in Saskatchewan. No, there's huge mines in Saskatchewan. Uranium comes out. Oh, uranium's bad.
Yeah.
Okay. Nuclear energy is bad. It takes 1 square kilometer versus 250 square kilometers for a hydroelectric dam.
Yeah.
There's people need to do the research. What I love also, though, about the mining space in Canada is exactly what you said. I'm an outdoors guy. I backcountry hike. I do overnights. I love taking my son outside. I don't want the environment to be completely thrashed because we have this weird vision that we think people are going to destroy the environment because we're mining it. There's plenty of examples. A good example was Golden Star Resources I worked for in Africa, and I loved the programs we did there. When we finished the tailings dam, an area, we'd reclaim the tailings into a palm oil plantation, and we'd help the community run it for the first 7 years. And by doing that, you made it a profitable entity for the local community. So hey, oh, well, just leave a mess. Look, there has been messes left in the past.
Sure. Yep.
Absolutely has. But that's not the norm. That's not the rule. That's the exception.
Yes.
Most, I'd say any mining company that I know that I'm a part of, that I've been a part of generally is like, hey, we we want to hike here after. We need to live near this. So like, you can't just say don't look at it. Like these are very important parts of how you do reclamation and how you work with the governments and the local First Nations and stuff on what do you want this to look like when we're done. That's a big part
Yes.
of it.
Yes. I'm glad you brought that up because a lot of people have like this, like they'll point to, well, 100 years ago, this happened. You're like, yeah, that's 100 years ago. It's not like we're slow moving. Mining is a bit slow moving, but we're not that slow moving.
Yeah. We also didn't have phones and we didn't have
Yes.
internet and, we didn't have cars and the ability to fly everywhere. So yeah, let's compare to 100 years ago. Well, guys, 100 years ago, the actual mentality shift was different too. Like
Yes.
we evolved as a society. We've changed a lot. So,
Well, listen, let's wrap this up because we've taken a lot of your time. Tell us, kind of give us the kind of the conclusion as to what for you, like you're saying, like that culmination of ambition, spirit, readiness. What would you say to a young person to say this is what you should focus on, and then give a little plug as well. Just kind of remind us exactly what you've put together here, so that people can put it on the side of their computer and go, okay, let me follow Morgan here and see what NexGold is doing and see if how they're going to spend this $25 million.
yeah, and I'm gonna give a little plug here first on for a young generation, and it's actually my business partner. I have a private tech company that I have a business partner, and he's 24 years old. His name's Henry McPhee.
Okay.
And mining engineering student, one of the hardest working kids I've ever met in my life.
Awesome.
Like just insane. And if I could tell anyone, any advice, call him. Like he is young, he's motivated, he's not, a super rich person or anything like that. He comes from very humble background, but he sees the world in a I have to hustle mode. And I'm telling you, I haven't met many young people like him. That's why we're partners. We both run at about the same speed. And that's I think, don't be scared of messing up. We are so internally scared of failure. We often don't try. Take that ego away and stop indebting yourself to yourself. The only debt you have to yourself is that you didn't try.
Yes.
Because I've failed more times than I can count, trust me, at many parts of life.
Well,
and I'll
yeah.
fail more. But as you grow, you learn. So, I've learned a lot from those failures, but you need to look at people like the Henrys of the world. And as I grew up similar, you just didn't stop. And it's, the mentality of, well, he does it, I can't, is wrong. You 100% can. Like a 100% can. Steve Jobs wasn't a programmer. Steve Jobs was the guy that orchestrated the ideas and hired the right people. If you don't know how to do it, there's people that do.
Yes.
Go to them, learn the basics. I always say the best leaders I've ever seen are the generalists. And the best leaders I've ever seen on the technical side are the specialists. Right?
Nice. Yeah.
So know enough, learn enough, find a path. I want to get to X. I don't want to do it the easy way. I want to do it the hard way. I want to do it the hard way because no one else will walk that path. Anyway, so that's my kind of plug on that.
And before you do the final about the project, we will get his email if you want. We'll put the contact into the video as well. So we'll do that. Or if we don't have that, you can reach out to me and I can direct you towards Morgan as well. But yeah, so because we want to encourage people to get excited. There's a huge opportunity, not only in the short term for the equities and the sector, but just for someone to build out an amazing career in a whole different way in different parts of it as well. But let's leave it on what you've put together here again. Just kind of sum it all up for us.
We put a company together that has 6 million ounces of gold in the ground, two of the most near-term permitted projects in Canada. What that means is two of the next companies or mining projects to be built in Canada. Both will produce over 100,000 ounces per year. And why that's important is because we have the path to becoming a mid-tier. And that path now has two buildable projects in it, which, as we all know, is very rare to get, that are permitted around the same time. Usually you have one and then you're working on the other. So this company is ready for explosive growth, along with the gold price the way it's going. It doesn't even need to move. We're in a state now where we have the right team, the right projects, the right processes, and backers like Frank Juster, which is the right money behind you, and the extracts and the Sprott Capital and Sprott Asset Management. So you have that trifecta. This is something that when the generalists come back, they'll probably have already missed it, because we are a pipeline of assets that a lot of companies are missing, and we're going to build a company on it.
I love it. And lots of news flow. There's going to be a lot of news.
Yeah. Lots of news flow. Tons.
Excellent. Morgan, we really appreciate you taking the time. And once again, congratulations on what you put together. It is a ton of work. I know it seems like, we kind of made it like it's very fast, but you put a lot of work over years to get it to that point. And you've got to this stage, and we're hopefully entering this explosive market, and all the success and all the best for you. We appreciate your time, and we'll chat with you really soon as well.
Thanks.
Take care, Morgan. See you later.
Bye.